Okay, guys. I want to quickly tell us how I cut this trade. I would have held this trade until the TP. The supposed TP is where this that line is above there. All right, this place is supposed to be the TP, but I had to exit because of the CPI. I exited around here. I exited around there yesterday because of the CPI, but that was still a great profit, if you ask me. Right? Because I actually was entering with 45 dollars and ended up making 700 and something. That's $750 or thereabout. So it was a great profit regardless. So it's supposed to be 1,000 plus. That's it. That's how $45 could have turned to 1,000 plus, but I ended up with 700 and something dollars, which is still very great for a $45, you know, flipping. Right? So that's the beautiful thing of understanding your onions, knowing what you're doing. Okay, so let's just go quickly into this. Now, if you look at this place very quickly, you see um, the reason I put this box, I'll show you. There's a fair value gap. There's a fair value gap, right? Right there. So this is a 3 hour fair value gap. You can see it, right? I think it's also showing on the file. Okay, it didn't show on the file. A 3 hour fair value gap, right? So I used it as my source of order flow. So price actually took um some liquidity from this fair value gap. I told us that fair value gap also acts as liquidity. So price filled this fair value gap. That's more reason why I didn't wait for price to come down to a particular zone. All right, that's number one reason. And number two reason again, because price hasn't gone far from the key level that I took it from. So let's look at it very well. So this fair value gap, you see how price dipped into the fair value gap. All right, you can see how price came into the fair value gap. Now, I don't know if I can see something to point out something so that everybody will be seeing this thing very well. Mm, mm, I don't think so. So let's just manage this. Here we have cursor. We normally have pointers. Don't want to waste our time. I just need something to be pointing this properly for us. You can see under tools. So maybe it's because I'm using mobile, but on laptop, face too. So I don't want to use laptop so it doesn't feel like the video is lengthy or something. So yeah, that's it. So we have this filled the fair value gap and then to the upside. So when it went to the upside, what happened? There was a key level that formed. You can see it. That key level provided the basis for my entry. Look at it here. You can see where I put this already. You can see this key level. Okay. Provided this key level after forming this, after filling the fair value gap there. Right? So what do I do? It's very simple. If you want to enter from here, very simple. You get your this thing and and this is where you put your stop loss below the place that has filled the fair value gap, and you can see how price did. All right, but what I did was I refined it even further. I took I didn't take it from that time frame. I went to 45 minutes because I understood something. Price normally goes to um if in a higher time frame like 2 hours time frame or 3 hours, you have a key level. And in that same point, just like in this point, you also have a key level in a lower time frame like 45 minutes or even 15 minutes. Price tends to get to that lower time frame on. Yes, that's what I've observed. All right. So where did I put my this thing? I didn't use that one because I'm having a key level on the first 5 minutes. You can look at it here. So what I did was I had to use that one. That's why you see where I put my listen. So this was my entry. I can't move this thing or what? I can't move it. I'll remove it. So we had an entry from here. This one I just was, on Sunday, yeah, before I slept. So, yeah, I was just prompted in my spirit to, put on the trade before going to bed. All right. Initially, I was looking at this place, that's okay, maybe 1 to 3, but later after proper analysis, I said, okay, we are going to go to this point. So it was showing me a 1 to 6, a 1 to 6 reach reward. All right. 1 to 6, and it got there. Just that I had to exit. I had to exit around here, which is like a 1 to 4 risk to reward. Alright, not bad. Then again, because price has tested this one, when it went up, it created a fair value gap around here, which I marked. This fair value gap, alright. I first of all marked it on the 2 hour time frame where it was wider. Is it 2 hours? I mean 1 hour. Okay, on a 1 hour time frame it was wide like this, but I know something, you can further refine. Refinement is good. So I went to 45 minutes, lower the time frame. All right, I refined it further, and this is where my fair value gap is. Now sometimes if I had not gotten entry here, what I would have done, all right, then was that I would have used this fair value gap middle of it, because my stop loss area would have been far. I use the middle of it and I would have taken an entry. All right, and that would have been a 1 to 3, almost a 1 to 4 as well, 3.95. But I didn't do that. I had to wait because I already have an entry and I need to be managing risk. If I did that, my stop loss would be here and I would still have an open position. So I would have had more than $45, all right, in the distance. So I had to wait and went to 15 minutes time frame. 15 minutes time frame. I'm literally telling you how I'm taking my trade. 15 minutes time frame. If you check 15 minutes time frame, you could see a little key level here. Right? After the key level, there is no areas here. There's a small gap here where price could have come to, but if you had taken this trade, you could have put your entry here because of this little key level in the 15 minutes, and your stop loss would have been at the bottom. All right, if you are taking it from the fair value gap I showed you on the 45 minutes, you would have used 15 minutes to refine it to this particular key level, and your stop loss will still be here. So in that way, you make better profit. If you look at it, I think the profit would have been higher risk to reward. Well, you have a risk of not getting triggered though. So I advise middle of the fair value gap. You can see more than 4 point, more than 4.5, right? So, but what I did was that I waited. Somebody say wait. So I waited. You can see how this guy, you can see here, price dropped. If you can see, it dropped, went up, came back and broke. All right. So that becomes a shift. You can see very well on the 15 minutes. So like in previous video, I told you you can use 15 minutes for entry, you can use 30 minutes. So you can see the high. If you understand when we did when we did what do they call it again? SLQ. You can see this one. And then the high of it was taken out. If you've not read that book, it's ready for you. Alright. See, this guy came down and the high was taken out by another candle. You can see it. This candle took it out. This particular candle took out the high of the previous candle, took out the high of this one that went low. So that's SLQ for you. All right. So how do you do it? You wait for this high to be broken. Once it is broken, like I said, you look for what another key level there. There must be a key level. Can you see? That was where I made my entry. This entry I also took it at night, so I had to. I think it was at night. Yes, as I enter it and go to bed or something like that. I can't remember. Okay, it wasn't at night, it was during the day. Alright, so how did I take this trade? Because this was the low estimate, that was where my SL was. Alright. One thing about being in the direction of the trend is that I don't understand. Price can do somehow, but your mind is still strong. So yeah, this was like a 13 pip stop loss. And yeah, this was my entry. By this time, my stop loss will now be here. You see, I'm not risking the $45 there. Meanwhile, this one is already floating in profit. That's it. Please be patient because I'm explaining something that most people will not explain to you. So, where did I target? Even if I stopped here, like I did yesterday, that's 1 to 8. Right? But I was targeting up to this point, which is 1 to 12. Mind you, I'm already used to 1 to 10. Right? So this is like 1 to 8. Okay. And it didn't stop there. It didn't stop there. So when price broke to that top side, on the 45 minutes, your ability to use multi-time frame is what in fact will benefit you a lot. Now for this one, this case, all right, look at it. Although there was a place I would have entered on the 30 minutes time frame, I would have used this fair value gap. There's a little fair value gap here. There's a little fair value gap here. If you look at it very well, because of your chart, you check it out. I would have used it to make another entry, but like I said, I'm managing risk, so I had to wait until the first trade is already in profit. So now, and we are talking about stacking, talking out loud. So now, price gave us another zone. This one was very obvious. Who could have missed it? Who could have missed it? Let me show us what 30 minutes time frame I'm talking about. So look at it very well. And see, there's a fair value gap. There's a fair value gap here, right? And there was a key level here on the 30 minutes as well. So, and price actually touched it. Price actually touched the key level. If you can see it, look at it. All right, that could have been another entry, and the stop loss will still be here. But I got an earlier entry on the 15 minutes time frame. So if you are sticking with 30 minutes, one good thing about the 30 minutes is that this trade is more mature. All right, but you also stand the risk of missing out. But it is more mature. So it doesn't fake you, right? Higher time frames entries are more mature, right? So now on the 45 minutes, you can see this. This was it. And then what happened? Another entry. Okay, another entry. So we had an entry, and the stop loss obviously will be below here because this one has already mitigated the key level, previous key level, and we had this entry here around 14 pips or thereabouts. Okay, that was the third entry, and this one gave us about 1 to 6.5. Could have been around 1 to 10. Okay, 1 to 6.5, and that was it. That was it. Now, talking about order flow, you can see something. You can see something that all of them, they were filling up each other. That's order flow. See this key level, all right? The first key level, this first key level, all right, was filled up a fair value gap that I mentioned in the beginning. Then it was filled up by this move. The key level was taken by this move, all right? On the 15-minute time frame, we saw it form a new key level, which this guy came to test again, all right? And then as he moved, fair value gap was created around here, and then it was tested, it was filled up, and then another key level was created here, and then price moved, all right? Price did what? Moved to the what? Upside, and that was it. So order flow simply means price is creating areas of value and filling up those areas of value. Price is creating key levels and fair value gaps. To keep it simple, key levels and fair value gaps. That's what you need to know to make money here. Price is creating key levels and fair value gaps, and price is what? Filling those zones up. All right. Assuming price created a fair value gap here, price created the fair value gap here and then fill it up, and then went up a little bit, come back, even if there's a key level there, price may not respect that key level because if it has gone far, it may not respect the same key level. All right, it has gone far, it may not respect the same key level. Why? Because we have a fair value gap that price has not filled up. All right, except when price is very close, like in this case, it might still work. And sometimes to struggle, I'll show you a case where it struggled. Now, price definitely was filling up everywhere. Okay, so let me show you case where price struggled, even though it was CPI that caused it. Let's go to 2 hours so that we can see very well. Look at it. We have a key level here. This is a key level. But below that key level, we have what? A gap. And price has not filled the gap. You see the difference? This one, before the key level was formed here on this 3 hour time frame, before the key level was formed, look at the key level was formed. Before I took it, it filled a fair value gap. One. Now look at this current one here. It didn't fill any fair value gap. All right, 3 hours showing the same thing. You see, it didn't fill any fair value gap. So there is no source of flow. And we still have a key level that price has not touched with a fair value gap around here. So we need to have a source of what? Flow. We need to do what? Have a source of flow. So what happened was that price just formed this zone, and you can see what price did. All right, still came back to the fair value gap. Right, still came back because you need to come from a source. Still came back to the fair value gap before it went up. You can see it happen even though price had not gone far. So if you want to take this type of trade where you don't know the source of the flow, you didn't enter fair value gap, you didn't mitigate another key level before moving, then you would have tried to use lower time frame like 15 minutes to look for a shift. A shift would have been like this. After price had gotten to this point, after price had gotten to this place, you want to wait it to break above the previous strong high. All right. Yeah, you want to wait for it to break above the previous strong high. And as you can see, it didn't do that until after it came here before it now broke. All right, before it now broke and created this zone. Me, I would have entered from here again yesterday. Honestly, I saw this. So I would have entered and my stop loss would have just been around here because I can't put it here too far. But why did I not enter? There was no need. I've traded good profits. I didn't want to struggle with myself mentally. And also, it's not really good when you finish taking good profits to just jump into trade, especially when the zone is not a very beautiful zone. All right. It's not advisable because you just be stressing yourself unnecessarily. That can be seen as greed, right? So another thing, Trump was going to speak around 8 p.m. I didn't just want to stress myself with all that, but I marked it honestly, and price still respected it, right? Price still respected it. So that's what I'm trying to communicate. Order flow with key level. That's what you need. If you understand order flow, marry it with key level, good.